Have you ever been in a situation where you spot a trend but just cannot figure out where it is heading next? Up or down? Honestly, that's probably the single most important thing we need to determine before taking any trade. And let's be real, there are thousands of videos out there showing all kinds of techniques trying to predict where the market might reverse. But in today's video, I'm going to switch things. Instead of focusing on trend reversals, we're gonna talk about trend continuation. I'll be using a modern moving average with secret settings. And that's not all. I'll show you a few powerful price action continuation patterns that will take our setup to the next level. So make sure you watch this video all the way through, because I genuinely believe you'll walk away with something valuable that can improve the way you trade. The very first thing we need to do is to bring the moving average onto our chart. To do that, head over to the Indicators tab on your TradingView and type in Moving Average Ribbon. This unique indicator has been going viral lately. Once you click on it, it'll instantly appear on your chart with 4 different lines. Now for a few quick modifications, open up the settings. Make sure to follow my exact steps as I tweak the settings for the best results. In the Styles tab, everything is completely optional. You can adjust the opacity and set any color you like for each moving average. When you use this indicator with the right settings, the breakouts you see from these lines are potentially valid. You can take trades right when the candles break out from all the lines. Those pullbacks to the lines, they're not random. They can be our potential entry points into a trade. And after a major breakout or momentum shift, you'll often see multiple pullbacks forming. Pay attention to the first 3 orange lines. They usually become instant support zones that can literally flip the market direction in your favor. But here is the part nobody likes to admit. This indicator fails in ranging markets. Like any other, when the markets start moving sideways, the candles just float around the midlines, giving you fake breakouts left and right. Like I always say, price action is the real truth behind every move, and that's exactly what we'll use today. Continuation patterns that let us trade with the trend and completely ignore the fake breakouts that ruin most of our trades. But before we continue, a quick shout out to today's sponsor, Intellectia AI, the most powerful AI-driven platform built for smarter investing and next-level trading decisions. With just one click, you can access quick insights on any asset, from technical analysis and crypto analytics to full-scale fundamentals that keep you updated on every move in the market. But here's where Intellectia AI really stands out. It offers an entire suite of AI-powered trading strategies, from pattern detection to the AI stock picker. That thing is built to help traders find high-probability setups in just seconds. The AI stock picker scans the market daily and highlights the top stocks to trade based on momentum, volume, and price action patterns. You'll even see their performance metrics below, total return, drawdowns, and more. Everything transparent, data-driven, and easy to follow. Next up, the Swing Max trading feature. This is your personal AI assistant for swing trading. It guides you through setups, reduces your workload, and lets you trade like a pro without stacking your chart with a dozen confusing indicators. You can even view their annualized return of Swing Max strategy to understand how the system performs over time. And my favorite part is when I search for an asset, let's say Bitcoin, and open the advanced chart. You get a full TradingView based workspace right inside the platform. You can change timeframes and add as many indicators as you want and enjoy the exact TradingView experience, all for free in one place. And to top it off, they update their news section every minute with the latest on stocks, crypto, and trending market stories, super valuable for staying ahead of the curve. If you want to explore Intellectia AI and see what AI Stock Picker and Swing Max can do for your trading, check out the link below. And consider this segment was presented for informational purpose only. Now let's talk about the chart patterns, because this is where things start to get really interesting. Imagine a strong uptrend that finally begins to slow down, it loses steam, and forms a flat range or a correction. Here's what I do. I identify the minor highs and lows, and then I connect them with two lines to track how the market is moving within that zone. Once there's a breakout from the upper line, that breakout could be completely valid, and it often signals a trend continuation, which is exactly what we are looking for. Now, because of its shape, this pattern is known as a falling wedge, a bullish trend continuation pattern. Now let's flip the situation. When we're in a downward trend and the market starts to show exhaustion or loses momentum near the end. Identify those minor highs and lows, connect them with two lines, and wait for a breakout. If the breakout happens from the lower line, that is your potential bearish continuation signal. And because of its shape, this structure is called a rising wedge, a powerful bearish trend continuation pattern that most traders completely underestimate. Finally, let's combine everything we've learned, the moving average ribbon and the chart patterns, to build a powerful strategy. Take a look at this specific chart. The candles have formed a higher high compared to the previous high, and that is our first sign of a momentum shift. The trend moves upward and then forms a range or a correction. I identify this phase with a falling wedge to track its movement. Once the breakout happens, I don't just jump into a trade immediately. For an extra layer of confirmation, I bring up the moving average ribbon. And right there, you can see a pullback to the moving average, which are actually supporting the price movement. That is a solid confirmation that the trend continuation is valid. Now right after that, the market forms another range or correction. I draw another falling wedge. And once again, when I check it with the indicator, there's a pullback supported by the moving average. At the breakout from the wedge, we've got another potential long opportunity. But trends don't just last forever. Eventually, you'll notice the candles start moving down sharply, forming a lower low compared to the previous major trend's low, and that is a sign of momentum shift from bullish to bearish. Now we switch our focus to short opportunities. This time, I draw rising wedges, and once the breakout happens from that wedge, I confirm it with the moving average ribbon. If the pullbacks are resisted by the moving averages, that breakout is likely valid. That being said, this breakout is our short opportunity. Once again, when a higher high forms after the major bearish move, it signals yet another momentum shift, from bearish back to bullish. And from there, we start looking for long opportunities once again. Now that you know this specific setup, I have to say it, risk management is absolutely key in trading. Markets are constantly changing, and what worked in the past may not always work in the future. That's why it is important to keep updating your trading system. So we know what the chart continuation pattern is. Let's talk about the other side of the story. What happens when candles don't just continue? Instead, they start moving in the opposite direction. In that case, we need to look at chart reversal patterns to spot those turning points and take advantage of new trading opportunities. I've already got you covered on that. I've made a full video on my channel where I introduce 4 unique reversal patterns that help you understand market structure on a deeper level. In that video, I also show you how to use Fibonacci retracements to trade those reversal setups effectively. So don't miss that one. It is a must-watch if you really want to complete this strategy. You'll find the link below in the description.